Video, we're going to go over IRS Form 2210, Underpayment of Estimated Tax by Individuals, Estates, and Trusts. So the purpose of this tax form is to determine whether or not you will owe a penalty for underpaying estimated tax. For most taxpayers, the IRS will figure your penalty for you and you don't need to file this form. You can file it to determine your penalty if you want to, and then you can include that penalty on your tax return. There are some situations in which you must file Form 2210, such as requesting a waiver. So to determine whether or not you have to file this form, you'll follow this flow chart at the top of the form. So I'll just read through it line by line real quick, and then we'll start going through each of the parts of the tax form. So if you, the first question is completing lines 1 through 7 in the tax form. If line 4 or line 7 is less than $1,000, then you don't have to file the form. That would be your estimated tax or your outstanding tax bill. If you owe $1,000 or less when it comes to your tax bill, you don't owe an underpayment penalty. You'll go through this line 8 and line 9, and then if your line 6 is equal to or more than line 9, then you don't owe a penalty. You don't need to file this form unless there's an applicable part, box E. Then you file the first page of this form. You go through that. If you didn't, if line 6 is not equal to or more than line 9, you might owe a penalty. Then you have to go through part 2 to see if any of that applies. And if it does, then you must file this form. If box B, C, or D applies, you must calculate your penalty. If not, you're not required to, because the IRS will figure it out. So, and then if none of those apply, then you don't need to file this form at all. You can use it to calculate if you want, but you don't need to file it. So you'll have to refer to this flow chart as you're completing the first part of this tax form to see whether or not you're required to file it. So before we go through line by line, I'm just going to walk through kind of just a brief overview of the form. Part 1 is the required annual payment. So this would be the sum of all of your estimated taxes, withholdings, things of that nature, and then whether or not, how that stacks against your estimated tax liability. Part 2 are the different reasons for filing. We'll get to that momentarily. And then part 3 is the penalty computation if there is a penalty that applies. So there's a section A, which is figuring out what your underpayment was, and then there's a section B, figuring the penalty itself. So let's scroll back to the top of the tax form, and let's start with part 1. So as I mentioned, if you don't check box B, C, or D, then you don't need to calculate the penalty. So if you're requesting a waiver, you do need to use this form. If your income varied during the year and your penalty is reduced or eliminated when you used the annualized income installment method, then you need to use this form to calculate it. There's a Schedule AI, that you would complete to determine your penalty, if applicable, under the annualized income installment method. And then you would file that form because it might be to your favor. Or box D, your penalty is lower when figured by treating the income tax withheld as if it were paid on the dates that it was actually withheld, instead of an equal amounts on the due dates. So if you received a huge bonus at the early part of the year, and you're paying the bonus up front, actually means a lower penalty than having that bonus and the tax withholding spread throughout the year, then you would need to file this form. And again, these are all reasons that you would file this form to show a legally beneficial, kind of to your benefit calculation. So in part one, you're going to enter your tax after credits from your Form 1040, 1040 SR, 1040 NR. This is line 22. This is your actual tax liability. So from there, you will go to line 2, which is entering other taxes. This might include self-employment tax, additional Medicare tax, net investment income tax. All of these would be included. The IRS form instructions contain the expansive list of all the different items that you would include in line 2. Those are just some examples. In line 3, you would enter other payments and refundable credits that would lower your tax liability. This could be earned income credit. This could be additional child tax credit, the refundable part of the American Opportunity Credit, premium tax credit, other tax credits. The complete list is in the form instructions. Those are represented by a negative because you're obviously lowering your tax bill by these credits. For line 4, you would just combine lines 1, 2, and 3. If this amount is less than $1,000, then you don't owe a penalty. So basically, if you're calculating this, this is the first part of the flow chart up here. Whether or not this is less than $1,000, then you would just stop at line 4. Line 5, you would take the number in line 4 and you multiply it by 90% because one of the rules is you have to have withheld at least 90% of your estimated tax. So if line 4 represents your estimated tax, line 5, you're multiplying that to get to 90%. And then line 6, you're withholding taxes. So these don't include estimated tax payments. It's simply the taxes that were withheld on your 1040 or 1040 or 1040 SR. That would be on line 25D. On 1040 NR, that would be lines 25D, 25E, 25F, and 25G. You could also refer to Schedule 3 on your 1040, line 11, if you filed those forms. On line 7, you're going to subtract line 6 from line 4. So if you had a number that was larger than $1,000 up here, but then your withholding taxes drop that down to less than $1,000, you don't owe a penalty. You can stop completing this form. Don't file it. And line 8 would be the maximum required annual payment based on last year's tax. So your safe harbor for this is either paying 90% of the current year's tax bill or 100% of last year's tax bill. That's the general rule of thumb. To figure out your previous year's tax, you would need to actually follow the instructions and go into your tax return for the previous year, depending on which form you're using. So the required annual payment, you're going to enter the smaller of either line 5, which is this, or line 8. If line 9 is more than line 6, so if your required tax payment is more than the amount you actually paid, then you might owe a penalty. If it's smaller, then you don't owe a penalty and you don't need to file this form unless box E applies, and we'll get to box E in just a moment. So if you might owe a penalty, you don't need to file this form unless you're going to check box C, D, or E below. So in that case, you must calculate your penalty and file the tax form. So Here, you're going to understand your required annual payment, and there are different areas where you can, off ramp and stop completing the form. But if you make it to the bottom of this and you still might have to pay a penalty, then you're going to go to part 2 and you're going to check the applicable boxes. If none of these boxes applies, then you don't need to file this form. But box A is you're requesting a waiver of your entire penalty. So you would have to check this box and then file page 1. But you're not required to figure your penalty since you're asking the IRS to evaluate your situation and completely take it off your books. For box B, you're requesting a waiver of part of your penalty, and the IRS is going to ask you to calculate the penalty, the waiver amount, so the part of the penalty that you think should be waived before you file the form. Box C, the annualized income installment method. Box D, lower taxability based on withheld income tax on the date that it was withheld. And then box E, you either filed or are going to file a joint return for one of the tax years. So this is for tax year 2022. You go back to either to 2021. You're filing a joint return for 1 year or the other, but not both. And line 8 is smaller than line 5 above. So your maximum required annual payment based on the previous year's tax is smaller than the 90% of the current year's tax. You must file this form, but you aren't required to calculate your penalty. So to recap, page 1, you might have to submit page 1 in situations, but if you are requesting an entire waiver of your penalty, or if box E applies, you don't have to calculate your penalty. You simply just request the waiver and send the form in. But if you have to calculate your penalty, then that's what part 3 is for. So part 3 has 2 sections. There's section 1 where you figure your underpayment. And so for most taxpayers, this should look like a quarter of the amount here, a quarter of the amount here for line 10, which are the required installments, a quarter of the amount here, quarter of the amount here. The one exception would be if your income varied throughout the year and your penalty is reduced or eliminated when using the annualized income installment method, then you would actually have to go through, and we're not going to do this, Schedule AI, where you actually calculate, do some more calculations to come up with a more accurate depiction of your tax liability. So the IRS form instructions do contain more detailed guidance on this if you should want to refer to them. And then line 11 is simply the estimated taxes paid or withheld for each of those periods. So, for the 2022 tax year, we're looking at your first estimated payment being done on tax day, then June 15th, September 15th, and then January 15th of 2023. And for column 11, you're going to enter on line 11 the payments that you made during those time periods. You're going to need to calculate lines 12 through 18 by going through a column, carrying this over to the next column. So what you would do is, starting in column A, which is the April 15th date, you can see that some of these blocks are grayed out because they're not applicable. So you start with line 15 and you would enter the amount from line 11. So whatever the amount is in this block for column A, line 11, you're going to drop that down into line 15, column A. If line 10 is equal to or more than line 15, then you're going to subtract line 15 from line 10. So let's imagine that you were supposed to make a $5,000 payment on April 15th of 2022 and you only paid $4,000. Then you would carry the $4,000 figure down here, and then you would calculate that you had an underpayment of $1,000. And if this was an overpayment, then you would put the overpayment in line 18. So if you were supposed to pay $4,000 but you paid $5,000, then instead of putting $1,000 in line 17, you would put that in line 18. Then you go to line 12 of the next column and you carry the amount from line 18 at the top. You add lines 11 and 12. So whatever the number is that's here, you would actually add that to this number here, and that's your total for line 13. And then in line 15, you subtract line 14 from line 13. So if for some reason there was an underpayment, you would actually add that here. So let's walk through that first column for a second. $4,000, you were required, you only paid $3,000. So we're going to carry that $3,000 down here because that's the number from line 11. So you have an underpayment of $1,000. So line 12, let's just imagine that this went straight across the year. So you've got required installments of $4,000 here, and you've been making quarterly payments of $3,000. So from here, you're going to carry them out. That's from line 18, which is 0. You're going to add lines 11 and 12, which is $3,000. You're going to add the amounts from line 16 and 17 in the previous column, which is basically $1,000 that you still owe. Then you're going to subtract line 14 from line 15. So that gives you $2,000. If line 15 is 0, you're going to subtract line 13 from line 14, otherwise you enter 0. So your underpayment, if line 10 is equal to or more than line 15, you're going to subtract line 15 from line 10. Then you're going to go to line 12 of the next column. So basically, you're going to subtract your $2,000 from the $4,000 up here. That gives you now a $2,000 underpayment. You're going to go to the top of this column and you're going to do the same thing over and over again for the rest of the quarters. So there's no amount from line 18 because there was an underpayment. You're going to bring down the $3,000, which you've added to this 0. Lines 16 and 17, well, now you've got a $2,000 underpayment that you're carrying forward. You're going to subtract that from line 13. So if line 15 is 0, you're going to subtract 13 from 14. If not, then you're going to enter 0. Your underpayment is now line 15, which is this. You're going to subtract this from line 10. So now your underpayment is $3,000. That's the amount that you'll carry up to here. Let's bring down these other numbers. And so now you're going to subtract line 14 from line 13. You've got a big 0 here. And then your underpayment is going to be the difference between line 15 and line 10. So now your underpayment is $4,000. So that's how that works. And then your penalty is going to be the total penalty from line 14 of the worksheet for Form 2210, which is not on here. It's actually in the form instructions. So if you have any questions, we've written an entire article about this. You can refer to it at our website, teachmepersonalfinance.com. Simply type in IRS Form 2210 in the search bar. And if there's a question that you have that this video and that article don't answer, please feel free to hit us up. You can join us on YouTube, you can subscribe to our channel, and you can send us emails with questions. Thank you.